overall extremely positive about
Yeah.
the future of fintech innovation in our country. And I think as consumers and as businesses, we're just going to benefit, and hopefully we can attract that global business to come and headquarter here in South Africa, where there is now regulatory certainty.
Amazing.
And we must forget that there's so much huge multinational companies that are looking for markets where there is regulatory certainty to do this development out of. And what better place than South Africa to do that? And 100% plug for Cape Town, which I think is the best city on the continent to do it.
Welcome, builders, to How Would You Build It? The podcast that dives deep into the dynamic world of startups and product creation right here in South Africa and Africa. This show is more than just interviews. Every week, we sit down with the brilliant minds to provide a masterclass for building digital products amidst the challenges and opportunities unique to our continent. From seasoned founders to dynamic product managers, we uncover the unique stories and strategies behind some of the most innovative digital products being built. So for all the aspiring founders and product builders out there, you'll discover that each episode is a wealth of practical wisdom and local and actionable insights. Make sure to subscribe or follow wherever you listen to our podcasts and connect with us on social media for even more content. Now, let's dive into today's episode. Welcome everybody to another episode of How Would You Build It? Taking a bit of a different approach today. We're talking about blockchain licensing. There's been some big movements there, and who better to bring on than Tobie van der Spey. He's the co-founder of Block Market Africa. Tobie, thanks for joining. How are you doing this morning?
Fantastic, Bobby. Lovely to have both of you guys here. I hear that I'm the earliest recording you've ever done, so I win at least in something to start off with, but happy to be here.
Nice. Renia, your background looks pretty standard. I think you can't tell what time it is, but thanks for joining. How are you doing this morning?
The light's a bit different. My forehead is shining more than normal, but anyway, it's good to be here every morning. But yeah, excited about the conversation. A lot happening in the space recently. And obviously, there's been some stuff in the news about movements around regulation. So excited to get into it.
Yeah, I think that's a great segue. I'd love to kind of start understanding about it. I mean, we've heard a lot about these CASPs, the crypto asset service provider licensing that's been coming through. Tobie, can you just kind of explain, what this is and why it's so important for us to be paying attention in the space?
Well, what's exciting about the CASP or crypto asset service provider, and in other markets, it's called a digital asset service provider or a virtual asset service provider license, is that South Africa really is adopting something that's come out of the FATF and IMF for the last 5-6 years. So globally, these international standard setting bodies speak to reserve banks or central banks rather, like our South African Reserve Bank, and say to them, hey, this is where we think you should be looking at, and this is where you think you should be regulating things in order to combat fraud, in order to ensure that you've got stable financial markets. And one of the things that's been identified now for almost 6 years is that a functioning economy needs to regulate the digital asset service provider or the crypto asset service provider, as we call them in South Africa. And what these are is really anybody that offers any form of service under the very, very wide banner of crypto assets. So let me give you a couple of examples. If you buy or sell crypto at a crypto exchange, that crypto exchange must now have a license from the FSCA, the Financial Sector Conduct Authority. And this is really important because that means that that exchange must be an accountable institution. It must KYC you. It must practice anti-money laundering and the countering of terrorist financing policies. So all of these things are ways in which the global financial system ensures that at local, at regional level, a standardized kind of regulatory enforcement takes place so that we know, hey, you can't go and steal money in Dubai, bring it into South Africa and kind of disappear with it, because we have a similar regulatory structure around the world to keep track of naughty people. What's exciting, though, is that it's kind of shifted. This compliance with global pressure has created a really interesting opening for the fintechs in South Africa. We'll get to more about that later. But crypto asset service providers are cryptocurrency exchanges. If you do crypto arbitrage in South Africa, you're now working with a crypto asset service provider, and they have to be licensed as well. So people doing cryptocurrency arbitrage need to check that their service provider is licensed. And if anybody tells you they're going to make you rich by buying crypto, they better have a license. So this is one of the major areas. If we look at Mirror Trading International, all the big things that we've had, these guys argued that because they had you buy crypto at a cryptocurrency exchange and then send it to them, that they were exempt from the regulator, because the regulator clearly says that they did not regulate crypto. So therefore, if you made an investment in crypto, our regulator couldn't protect you. There was no rules. Now, the regulator said, hey, guys, we know you're just trying to circumvent this. And they were limited in terms of how much enforcement they could do. For example, they can't go and tell people, hey, these guys are practicing fraud, because the guys who's doing the work and taking your money weren't under their regime. They weren't under their jurisdiction. So it would be liable for them to go and make a statement, a proclamation like that, because it wasn't their domain. Now, all those guys are under the FSCA's domain. There's a lovely talk that was done last week by Gerrit van Deventer from the FISCA. So we call it the FISCA. FSCA. It's easier to shorthand. Believe you me, we also like the FISCA is coming. So it's important to be able to say it quickly. But it's interesting, this conversation he had, which was really saying, you have to ensure that the party taking your money has a license. And there was a big loophole in our laws. So a lot of people paid their pensions over to third parties. And the third parties just said to them, no, it's fine. We don't need a license. We don't need to be regulated. The government is behind the curve, right? And this is how you're going to make all the quick money. And no wonder everybody lost their money that way. So what these licenses do is they provide a regulatory framework and a reporting framework that a service provider must comply with. And this gives the regulator now all the tools to do enforcement. So they can shut them down, they can take them to jail, they can launch court cases on them, they can make public advisories. If you don't follow the FSCA's Twitter channel, I really recommend you do. The FSCA's X channel is a really important. It gives warnings about scams all the time and talks about how financial service providers are trying to circumvent regulations. It issues cautionary advisories to customers. And it's really doing a really good job about making sure the public is aware of what's going on. We as the public, though, we'd much rather listen to the next meme coin and what the next NFT is going to be than to listen to the regulator who's sitting there trying to keep all these little ducklings of South African investors in line and keeping from losing their money. So these licenses have been, or the mechanism by which you can get the license started on the 1st of July of last year, 2023. And there was an interesting exemption period offered by the FSCA, which is a really clever way of doing things. So what they said is, guys, there's a bunch of you out there doing crypto asset services. For those who want to continue doing it, you better register and complete the license form application with us by the 30th of November of 2023. And if you don't make your application in this time, then you immediately on the 1st of December have to cease your crypto services. You have to cease operations, because you're now illegal.
So they just have to apply at the stage.
It's an application. However, so what the FISC has publicized is that there was 145 companies in total that applied. In the period, 20 companies actually withdrew their applications. And they actually gave us some information about that on the talk show, where Gerard mentioned that the 20 that withdrew were predominantly one of two reasons. One is, it was existing financial service providers that thought, hey, we're going to get a license to trade crypto as well. And then realized, well, they actually don't have a key individual. So in a licensed entity, the key individual is a person that's accountable in his individual or her individual capacity to the regulator to ensure that the customers aren't defrauded, right? It's a really serious responsibility. And a crypto service provider's key individual, that person needs to understand the technical complexities that exist and the risks that exist in crypto, not just the fraud risks, but also the security risks. And it's really important that that person also takes accountability, so that there's nothing like, well, if you invest 50 rands today, you'll get 50 rands every day for the rest of the year. Those kind of insane promises that we hear, those are irresponsible promises, and the key individual is accountable for that. So what we've done is, these license structures brings all the stuff that existed in the existing financial system, which allows us to have healthy investments and healthy savings models and healthy loaning and insurance and all these kind of things that we all need, and bring them into the crypto space so that the crypto space can be cleaned up, for lack of a better word. So 125 license applications remain, and about 50 of those we anticipate will be formalized in the next couple of weeks. So I know a number of these guys personally. They've all said to me that they've had the conversations with the regulator. The regulators told them they've been approved for their license, but the regulator has not yet issued those licenses in the public. So a couple of my friends have gone onto Twitter and LinkedIn and said, we're licensed. No, guys, you've been licensed. The licenses are not public just yet, but we anticipate them to go public very shortly. And we anticipate a cohort of around 50 companies to be licensed in one go. The FISC has also said that they're processing these 125 applications in 3 batches. So the first batch they anticipate to announce is about 50, and then the balance of the applications will be handled probably during the course of middle to end Feb, and then again, hopefully middle to end March. So we anticipate by April that there will be some kind of a position made clear on all the applications. I know of some interesting players that have already been regulated. They already have investment licenses and credit licenses, and they've said, well, we're using this technology for services that are already known. So for RAND-based investment services, so no crypto involved, but using the same technology. And because of the language in the license, it also now covers them. And they've gone through a whole process with the FSCA, and the FSCA has been quite confused on a number of these conversations, saying, but why do you need a digital asset license or a crypto asset license? You're selling an investment that's regulated and issued by a licensed investor. So there's still a little bit of confusion exactly how the licensing is going to play in the traditional space. But the license, the language of the license says, if you provide a custodial wallet for a customer, that means you offer them a crypto wallet that they can just log into. They don't have to remember their private keys. Or if you buy or sell crypto, or if you advise people around what they do with their crypto, or allow people to transfer their crypto, or allow people to store their crypto. These are all encapsulated under the CASP license. So what we're really seeing is a massive amount of new services being regulated for the very first time. And that means that these companies can get bank accounts, and their bank accounts can't be removed or revoked just because they're doing crypto business, because they can show that they're complying with the regulator. So what we anticipate, sorry for the very long introduction on this point, is that this brings a very healthy foundation now of regulated, properly, responsibly operated financial service providers that do use crypto services and offer these crypto services to their customers. And we can only think this is going to be a very positive thing for South Africa in terms of innovation and ultimately benefit to the consumer.
But that is something you mentioned there, Tobie, is quite interesting. I mean, we speak about 50 licenses, and if you speak to most people that have dabbled a bit in crypto, they can probably name it at most 5 companies in South Africa that operate in this space. I mean, it's Luno, Valor, OVEX, so 45 other players that are doing stuff in this space. Like, I think maybe just share an example of what kind of companies, and I mean, we don't have to talk about real companies, but what kind of companies do we expect to see come into this space, and what kind of solutions would they offer?
Well, that's interesting, Renier, because we don't see the many interesting, innovative fintechs that are building really good crypto-based products in South Africa. We don't really know them in the mainstream. But if you dive deep into the crypto space in South Africa, you realize we actually have a really mature and a highly innovative space, arguably one of the best in the world, actually. I often have international customers come and sit down with us in Cape Town, and within a 3.5 kilometer radius, I introduce them to 20 different really serious players in the crypto space. And they all are doing things that I believe is of global significance, and it's really it might be South Africa's best kept secret. And the reason for that is because we haven't had regulation. So people don't talk about things that they are worried about the regulator. And honestly, I've worked with most of these guys. There's no intention to defraud anyone. But we've all shared a fear that we go to the regulator and explain what they do, and they simply don't understand, because some of our very, very best friends from school still don't understand what we do in this space, right? So these guys got 6 A's in matric, and now we hope that the guys that's working at the regulator somehow are going to understand that we're not doing something wrong, but we're actually doing something good. So a couple of examples. There was a very exciting Bitcoin wallet called CentB that's been doing the rounds for many, many years at conferences if you're in the scene. And they offering you, in essence, the ability to store your crypto, your Bitcoin or your Bitcoin Cash, and a number of other assets. And they would now need to be licensed under the structure, right? Because they're offering a service that relates to cryptocurrencies. And another company that you might know is Shiftly. They do cryptocurrency arbitrage. And they're really, really popular. They've got a very, very nice professional setup. But you may also know of guys like Costello, and you may know of guys like Syncal. And there's a wide number of cryptocurrency arbitrage providers that are helping customers profit using their foreign exchange allowance, which is completely
so foreign and foreign companies as well. So the likes of MetaMask and Phantom Wallet, those guys also need to now comply with this.
Yeah, so if they have an office in South Africa, then they have to do that. So if they're domiciled in South Africa, they have to get a license. If they serve a South African customer, then there's another phase of the regulations that would take place. So what normally happens is at the start, you regulate and license the people in South Africa, and then hopefully you never become the SEC where you start regulating everybody in the world because they service as an American, right? So that argument is a bit tougher. You know, if your customer comes to me as a non-South African service provider and they're South African, they came to me out of their own free will. I didn't go and advertise to them at their local Facebook and their local currency. They're going to a foreign service provider. There, the regulators' rights really disappear, right? At most, what they can do is they can look at treaties that they have with the regulatory region and say to them, hey, we need, based on this treaty, we need you to get the information from the service provider and share that with us, or you need to make your service provider comply with certain rules. But by far the majority that would be impacted is only foreign players that have offices in South Africa and offer these services to South Africans from their South African offices, or specifically advertise to South Africans in our local currency, specifically advertised to South Africans. So Binance, which is a global player, has a South African office, and Binance South Africa has to be licensed, as an example. But Binance US or Binance Global don't specifically need those licenses. The Binance South Africa entity would need that license. But there is a lot of them. So a MetaMask is a non-custodial wallet, which is slightly different, which is, I mean, you install it by yourself as a software app that you install. They don't actually offer a crypto service to you. So technically they wouldn't need to be licensed. But I'm working with another interesting player right now who has a very clever mobile application where you actually connect your own wallet to the application, and then you can buy and sell crypto from the wallet. Now, if you are a South African and you connect to that service, it's not the wallet part that they need to have a license for. It's for selling you crypto that they need a license for. So even if they don't hold your wallet for you or hold your assets for you, if they are the ones that's selling the crypto to you, or more importantly, giving you advice which crypto to buy, right? Those are all services that have to be licensed now. And that's why a cryptocurrency arbitrage provider needs a license, because they're technically not selling you crypto. And in actual fact, if you really understand those flows, technically, I mean, what's supposed to happen is you should never give up your crypto. It's actually your money going offshore. You're buying crypto with your money. You're bringing the crypto back into the country and selling it for your own money, right? It saves your money. But the process that you go through, you need advice. You need somebody to actually trigger some of these steps for you. And that is services that you would need a license for. In actual fact, funnily enough, cryptocurrency arbitrage generally now is considered to be a category 2 license versus a category 1 license. And this might be very interesting for your viewers, because a category 1 license says you're offering a service to the customer, but the customer makes the decision. The customer has discovered all by themselves what they want to do. And they're telling you, I want you to do this for me. A category 2 license is where you're saying to the customer, trust me, I will make the decision for you. Okay. And that's a different license. So when the customer is actually giving up discretion to you, so it's called a discretionary investment license or a discretionary license. That's what a category 2 license is. There's a much higher standard to comply with than a category 1 license. So cryptocurrency exchanges, they're not telling you what to buy, when to buy, how to buy. They don't automate things for you. Category 1 license. Cryptocurrency arbitrage service providers are actually managing things in the process. They decide for you when the FD rate is good to make a profit. And that decision means they need a category 2 license. So it's important to understand the distinction between these two as well.
But these structures are already existence for the current system, right? So we're just kind of bringing it into this space now. And I think what I'd love to start chatting about is because even offline, we were just chatting about, where the South African public is in terms of their understanding of it. You just spoke about someone that had, A's in matric that are still trying to figure out what it is and how they can use it or not use it. But yeah, if you go look at the end of the month when grants are paid, you go to the Capitec Bank, the ATM is full. I just fear that, there's a huge gap still that needs to be followed. How is this going to help sort of bring the knowledge to the rest of the public so that these businesses that are going to start can actually start, utilizing it and getting that scale? So say, hey, look at these services that we provide. There's that education gap that I think is still there. What do you think is going to happen around that?
Well, regulation is really good for this. I mean, it slows it down at the start, but it speeds it up in the medium and long term. So why does it slow down in the start? Well, there's tons of people now that are nervous of being regulated, worried they're going to say the wrong thing, don't understand. So this category has not been licensed before. You need to understand crypto exchanges were mostly started by real nerds and geeks that sat around on Saturdays. Instead of talking to anybody else, they were sitting in front of their computer the whole weekend, like myself, and writing code and trying to figure out things. So it's great for them now that they've made some money. So now they talk to everybody else. But the fact of the matter is that these are not your normal business person, which means that this person wouldn't come from a perspective of knowing that regulations are there, right? So they're discovering this exciting new world, and all they can think of is sharing it with everybody that will listen, right? So this is a really positive place to start. But when it comes to people investing their money, there's a world of scammers that hang around. And the moment they hear, hey, here's an excuse to get people to move money, they start infiltrating the system. So it was a beautiful open, like Linux open source weekends. I don't know if any of you ever did them, but like 20, 30 years ago, it was just how you met interesting people in the tech space. You went to open source conventions and you met other people that like computers and software and systems as much as you did. And it was a really like a nice little family setup. And that's how a lot of these crypto exchanges actually started. ICE3 Exchange, as an example, started like that. And unfortunately, they closed down 2 years ago. But, you know, the real business guys that stepped in, they are the ones that may not well have properly understood the system, but they understood how to make money out of the system. And then these guys partnering up with the techies are just there to make a profit. And again, regulations don't really feature. And now it becomes like, well, I've built a business. The business is financed because it's going to get X return. So now if you add regulations, that means I have to change my business process. I have to hire a bunch of compliance people. I have to increase my security. I have to increase my reporting capacity. I have to hire somebody that knows regulations to be my legal counsel. I have to find somebody that is willing to be responsible and pay them to be my key individual. I have to do something called a risk management compliance program, RMCP. I need to have a chief compliance officer. Right? Oh my Lord, this is not the business I wanted. This is not, now the man has won, right? But the beauty of this is that when it's done properly, the education can be financed out of the bigger businesses that come into the space. So what we're seeing non-startups, right? Institutions and really large players now being able to get a license to come and operate in this space. And they have the budgets and the mechanisms and the communications departments to educate. Now, if I can't name names at this point, but we're really privileged to be working with very, very many, more than fingers I have on my hands, of really top tier institutions in South Africa that have all said, hey, there's a massive opportunity for us to enter the space now because it's regulated. And each of them have really significant experience in educating people, big customer support environments, places you can go to physically and talk to people. I might be giving the game away now very quickly for the but you understand what's happening is suddenly we get a different scale of business that looks at a 15, 20, 30-year term of recovery often. And that goes and says, hey, I can get into the space now. It's regulated. The rug won't be ripped from underneath my feet, which is a problem that kept these guys back.
Yeah.
And when they make the kind of investment necessary to educate people, they want to know that the market is going to be stable for a longer period so that it can recover that investment. And that's something that's really exciting. The other thing that's happened is that our leading cryptocurrency exchanges, and I don't want to pick favorites here, but there's one, maybe two that have really, really outshone the rest. And these guys have anticipated this. They've gone and raised the finance to compete at this level of maturity. They've raised their own game. How good is that for us as consumers? You know, so what's happened now is the bar has been lifted. Now we will see this filtering into the market in the next 6 months as these licenses are formally issued and as these guys start with their programs. But one of the biggest things that holds us all back is how hard it is to buy cryptocurrencies or to transact with them. And that's hard because the places where I keep my money makes it hard for me to get my money out of where the place is where I kept it into the crypto world. And the reason why they do this is to protect themselves, because there might be money launderers involved. You may be the victim of a scam. I've seen these scams happen so often where people are told that they have to load up money into a cryptocurrency account and then transfer crypto out to somebody else. And they don't even know what's happening. The guy ends up going in and sharing the screen on the computer and kind of helping them do things. just so that they can do it. And they're panicking because of some scam, right? So we should see less and less of these things, because people will understand now that I can't work with people that aren't licensed. And also the maturity of systems will make it more difficult for those kind of scammers to take advantage. Because as you're in the process of this stuff happening, there's warnings that come up and tell you, hey, it looks like the kind of stuff you're doing is wrong. Like if you were to do this in your online banking, there's channel limits, right? You can have multiple authorized people signing off on transactions. There's a level of control and reportability and accountability that exists in the existing financial system that we are now seeing coming into the crypto services, because at the end of the day, it's still value. The fact that this value is encapsulated and traded in a different way really doesn't divorce it from the idea that this is my hard-earned money and value that I am now spending in the space and trading within the space.
I would love to share with the audience around stable coins. I mean, because if you just take a step back and you say, blockchain is a ledger technology at the end of the day. So we talk crypto, we've been kind of talking about the financial sort of element to all of this, but there's that foundation layer that it's a ledger, right? And on that comes a lot of different use cases, and one of them has been stable coins, and I think that that's going to play a big part in this. And I've heard how a stable coin can grow geographically, right? So for example, in South Africa, or an African coin or something like that. Can you just kind of explain, before I go off on a tangent, around the use of stable coins and why that's important, and how that can also disrupt the current status quo?
Well, firstly, let me confess that I wasn't there when stablecoins started. Some of my co-founders and friends were there, and I had to play catch up. So around 2014, I'm told, people were transferring crypto between cryptocurrency exchanges, and the real issue was the price of Bitcoin at one exchange was a lot higher than another exchange. So I very quickly wanted to send money between these exchanges, but withdrawing money into the banking system from an exchange, making a payment to fund my account at another exchange, took too long. By the time my money arrived the next day, or even if it was fast by the afternoon, the price of Bitcoin would have changed so much that I couldn't take advantage of that trade. And that's where the first forms of arbitrage that we saw in the crypto market, just balancing the price between two exchanges. So stable coins was started, and the first real serious stable coin was USDT, or Tether, as we generally tend to call it. And they have like a $95 billion market cap, which is quite astounding, which means that $95 billion has been transferred to the Tether organization, we think, anyway.
With 50 employees.
Yeah. And it's one of those interesting things where what they did is they said, hang on, there's a need to have an instrument, a cryptocurrency, that was dependably going to be worth $1, and that I could get my dollars out. So I could go into this cryptocurrency, but I could also go out of this cryptocurrency dependably. And that dollar cryptocurrency suddenly became the way in which I transferred value between exchanges, because I would now send my USDT. So long story short, stablecoins is just a representation of monetary value in this new economy, in this new digital asset economy. The problem with that is that, again, a bunch of well-meaning people solves the problem, so excited, and everybody starts using it. But the regulation is very far from everybody's minds. And what happens is suddenly some guys are sitting and getting a lot of dollars in a bank account, and nobody's checking what's happening with these dollars. Nobody's wondering, how is this managed? And the way they launched, they were first, and nobody bothered to ask the questions. So that even today, when they're doing their quarterly financial reports, we still see them, we still don't really know how much money there is. They do their reports today, and there's $95 billion in Tether, and it's a blend between some cash assets at banks, but what we call the corporate paper, meaning bonds and notes invested in other companies. So if you actually then step back and ask yourself, what is a stablecoin really? Well, a stablecoin does the things that a commercial bank does. So what are those things? So commercial bank, if we just clarify that quickly, says to you, hey, Bobby, put some of your money with me, make a deposit with me. I'm going to take your money and I'm going to buy financial instruments, right? Bonds and notes and investments in property and mines and all sorts of things. And I'm hoping that I'm going to make money as a bank. Now, I've got very, very clever people that know how to check if an investment's a good investment or not. So most of the time I get it right. And I'm also licensed by the central bank to make sure that I don't make reckless investments, like loan the money to my friend's company, as an example, which a stablecoin may or may not have done. Right?
So the FTX story.
I don't have to point fingers. I think there's many examples. If you really think about it, probably 5 come to mind. And it's funny how people tend to do really naughty things when they don't get followed up on. I remember actually, Renier, something you've said ages ago was you cannot manage what you do not measure. And this is one of those things where nobody was measuring this, so it wasn't managed. So stable coins then go, well, if a commercial bank can say to you, hey, give me your money and I'll give your money back later, and then they go and invest it, then we can do the same thing. I mean, nobody actually thinks that all my money sits somehow in a cash vault at the bank, right? And if you think that, then I've got bad news for you. The very nature of a bank is to take risk. And it's because they take risk and make these investments that our economy actually can build. So at times I say, there's this tongue-in-cheek, we all collectively bet our money as individuals and businesses on the fact that the bank is really, really good at investments. Because if the banks weren't good at investments, then we all lose our money. But most of the time that works. In actual fact, we've only had 2 bank failures in South Africa in the last 30 years. And that's a really important testament to how good our regulatory structure in South Africa is. And this is what we call prudential risks. And this is why in the regulator, we have a prudential authority that regulates the banks. So prudential authority looks at how your risk management in terms of your reserves are working. Are you able to pay your debts? Are you solvent? What kind of investments you're making? So the primary regulator of our banks in South Africa is the Prudential Authority. Whereas if you look at the CASP licenses, they're issued by the FSCA, the Financial Sector Conduct Authority. And their role is more about, is there fraud being committed? Is there money laundering taking place? Is there unreasonable credit being extended to people? Right? Are you advertising false services? Are you taking advantage of the customer? And this is something part of a Twin Peaks regulatory model where you have these 2 major role players, one that looks at the risk of the assets and one that looks at the risk of the offering to the customer. And they focus on those 2 things. So stablecoins fall, in my mind, heavily, of all crypto instruments, fall heavily under the prudential category. Because the question is, what is happening with these reserves? And if a commercial bank is so heavily licensed and does reporting, and there's so many prescriptive guidelines that says what you can and can't invest in and how much cash you need to have on hand and everything like that, none of those exist for stablecoin providers. Now, our South African regulator, by the way, have noticed this, and the Crypto Asset Regulatory Working Group is working on a paper right now around stablecoins and how stablecoins should be regulated. And what's really interesting is the Bank of International Settlement in July of 2022 issued a really important paper called the prescriptions for financial market infrastructure on systemically important stablecoin arrangements. Now, in English, that means, hey, stop holding the stablecoins are financial market infrastructure. It's real money. You're just pretending to wrap the money up in a cryptocurrency. And because you're transferring money and doing payments with the money and enticing people to invest with the money, you should be treated like a regulated financial market infrastructure that's enabling that. And if you are treated like that, then here's the prescriptive guidelines for you to run such a level of critically important or systemically important stablecoin arrangement. And we all think it's a tongue-in-cheek stab at Tether and USDC in order to get them to comply. And if you read that guidelines, most of it is prudential. Most of it is about how you ensure that any instrument that's traded in this way is actually managing its reserves like the commercial banks do. But this hasn't become the law yet, right? So a guideline by the BIS is something we anticipate takes 2 to 5 years before central banks turn that into laws that are then enforceable. So we have these 3 industry standard setting bodies that I mentioned earlier: the International Monetary Fund, the Financial Action Task Force, and the Bank of International Settlements. And they produce these guidelines that central banks then in turn can cut into their own regulations. So stable coins really is commercial banking. But because it's not licensed, it's actually the creation of private money. It's not bank money, it's private money. Now, it has great opportunities and great uses, but it's also very, very scary that non-licensed entities are creating this much money, and that collectively as depositors, we take such a bet that they are good at investments, right? It's one thing to bet on the bank being good at investments. It's a very different thing to bet on a couple of guys that have $95 billion. I don't know if you know how many lawyers you can buy for $95 billion, but it's a lot. Like, it's enough to make sure.
Yeah. So
So
I
yeah,
think with all this regulation that's coming in, I know that, if you like one of the blockchain crypto OGs, it's always been about not being regulated, and then you get the other school of thought, which is please can we regulate it so that we can actually move into the space, and I'm on the latter. I'm like, let's bring regulation. I think that it opens up a lot of avenues for us. And there's that settlement layer, right? So again, talking about how banks are settling cash. So I get my pay slip 3 days before it actually arrives, right?
yeah.
And I've seen, with a stable coin, with a CBDC, you get it within minutes. And I think that opens up a lot of opportunity. So to finish off, I'd love us to just kind of tap into that. Like, what kind of fintech opportunities can we start seeing within, South Africa and obviously Africa?
Fantastic. So if you take the idea of stablecoins forward and say, let's not pretend that this is crypto as we think of crypto, right? Let's think of this as a financial service that's using cryptocurrency or crypto technology to deliver a service. Then you can ask yourself, if this activity gets regulated, what other services that we do today, like credit or insurance or payments, could we do in the crypto using crypto technology, using instruments that we're comfortable with, like for example, rands. I always jokingly say the only problem with crypto is that I have to go into some other currency that I don't know how much I have tomorrow before I can do anything. And that really holds adoption back if you think about it. So what if we could start with a digital rand that was reliable and that was treated like a commercial bank treats the reserves, right? So that it's there, it's licensed. And I can be confident that tomorrow I have the same amount of rands and that it's not going to turn into one of those two banks, Sambo and VBS, that folded the last 30 years in South Africa. So we're working with a number of industry providers and the regulator around such an instrument called the EZAR. And we're really, really, really excited to see how well it's been accepted. And we anticipate this is going to be something that's going to hit the mainstream in a really big way very quickly. And what's interesting about the EZAR is that it's not a stablecoin issued by us or by any specific team. It's a standard for any licensed financial service provider to issue their own stablecoin. And the standard actually takes care of all those regulatory requirements we just spoke about that the BIS put forward, and most likely what we anticipate to be in the regulations that will still come from our own crypto asset regulatory working group around stablecoins. And what does that mean? Well, wow, this means that I can, in essence, offer a wallet to my customer. I can give them a rand balance in that wallet. I can allow them to transfer the rand balance between people using this technology, right? They can make investments with those rands. They can pay for goods at the store with those rands. They can convert those rands to other currencies, cryptos, or foreign currencies. And they can receive payouts on their loans or their insurance claims in this currency. And why would this be beneficial? Because, as you said, it's so fast and it's so cheap. Now, part of this process is that we need to ensure that people can transact with these instruments without forgetting their private keys. I don't know if you've ever seen somebody try to remember those words that comes up when they set up a MetaMask account. It's really bad, guys, because they literally show it to the person who's advising them, and they don't understand that those 12 words is your account. That is your account number and your PIN all encapsulated into one. And if I can quickly take a photo of that, I can wait until you've got enough money in that account, and then I can take it because that is your account. So the security question around this really hasn't been addressed properly, especially for new entrants. So one of the foundational things is custodial wallet services. And this means that we want licensed entities that are regulated, that understand data privacy and data security to host your private key, to host your wallet for you, like an ISP hosts your email box for you. Very, very few of us run our own email service, right? That's how you can think of crypto wallets. It's into the future. It doesn't mean that you can't run your own email account. You can, but it's one of the guys that don't talk to other people on the weekends that do that for you, right? That's normally how it works. So this is a foundational idea, is that we need service providers that are able to step into the space and offer these services to customers. And that's how more customers are going to be able to interact. But now there's a whole world of new financial service providers that can start offering services using this advanced technology. And money for me is one of the most interesting things in the world. I tease and I say, money is like water. Like water will find a way through cracks to the lowest possible point. Money will find its way to the lowest friction point. Money likes to move. So what these new technologies allows us to do is to move money more efficiently with less restrictions, with less hops in between. Now,
And
that doesn't mean
cheaper.
Much cheaper, much faster. And there's some, like, if you can afford it, I don't understand why you make normal clearing payments in your bank, because the benefit of just knowing the money's at the other guy and it's dealt with is such a great feeling.
Yeah.
Now, we 10 Rand, 50 Rand, depending on your bank, though, for those rates. But with these new services, it's all like that. The money's immediately on the other party's side, and they immediately have the money. They don't have to wonder. But that benefit extends not just between traders in South Africa, but it extends between me and the whole world. So whether it's Singapore to New York, the money's there instantly. So there's new financial services that can be built around this. One of the most difficult problems we have in South Africa is access to wealth portfolios. So if making an investment in the stock market is a really difficult thing, because I need a broker and I need to set a minimum amount of money. And we've got players like Easy Equity that's trying to make it easier for us. But there's some interesting things like Easy Equities. You're actually investing and your risk is with Easy Equities. You don't actually directly own that instrument. You buy Impala Plaid shares.
A lot of people understand that.
Right? So that creates a new level of risk. If you use the technology right, you can directly own that counterparty instrument. You can own the issuer's contract. And that means that we could fractionalize that directly for you. Now, imagine if I can spend one South Africa Rand, and buy into the JSE All Bond Index, or buy into Harmony Gold, or buy into those things. And I can build up a portfolio like that. It makes investing and wealth creation accessible to an audience that previously couldn't do this. But what crypto also does is it brings many different financial services. This blockchain brings many different financial service providers together. And now you get new collaborative services. So one of the projects we've been working on is taking these fractionalized investment portfolios and using them as surety for on-demand loans. Believe you me, that's harder than you can imagine. If you go to the bank and say, listen, I bought all these shares of my online share trading program with you. It's worth 10. Okay. I want to buy a house. The house is worth 3. Will you loan me the money to buy the house? At the end of the day, they will say, but do you have enough income to afford the 3? They don't talk about the fact that you own 10. Now, it should be so logical, but you have the 10. You can use that as security. If I don't make the payment, don't bother me about my income and affordability. I have 10 with you. You hold it. You told me these were good things to buy, right? I mean, you were my advisor and said that was a good idea to put my money in. Just let me borrow 3 so I can buy a house. So those kind of transactions become very easy to do on the blockchain. And this is where we think really amazing opportunities come into the market. So whether it be payments, like I don't have to actually go and get Bitcoin to use ValorPay to pay at Pick n Pay. I can just have a new digital rand to pay at Pick n Pay as an example, or I can buy my airtime that way, or I can send money from one side of the country to somebody else like that. I mean, one of the things in domestic remittance that we see is still a massive problem is people that travel for work, especially low-income people, they get robbed on Thursdays and Fridays because everybody knows it's wage payday in the week. So what happens is they go to a local cell phone repair shop. They actually give their cash into the guy behind the counter, who writes it in a book, and then on Monday next week they come and collect the cash and go home on the taxi service so that they don't get robbed of the cash. Now, we can fix that problem very quickly, because if they get the money in this digital currency, you can't have that hijacked like that. And what's exciting is that money is instantly available, and there's new mechanisms of paying you more affordable interest around this. So there's a whole world of financial services that are suddenly regulated. And this is the message that I'd send out to your viewers. If you're a startup builder, what used to cost 200 million Rand to get a bank license in order to start with really serious financial services are things that these licenses are now enabling you to do by using this technology. So before you spend 30 million Rand or whatever it is on building your new insurance business, come and have a really, really close look at what's happening in the blockchain technology, because there's builders around the whole world, thousands and thousands of teams that are contributing to this open source technology structure. And there's nothing wrong with you coming into that space, taking some of that innovation, packaging it in a regulatory compliant way, and solving a problem that is too expensive for the big banks to solve. And I say it's expensive because the return on that market that you're going to service might be more than enough to make your business happy, but it's just too small for the big banks to take attention, pay attention. And this is where I think we're going to start serving the unbanked and the underbanked South Africans, because we're going to have lots of startups that have a low cost investment. I mean, I've seen some really exciting startups that are under R1 million, right? And to real product using this technology, solving problems that are there people that need this? And then I go and it's like, they've got 900 active users. Where do these people come from? And because they spend so little money and the income they make, they have a subsistence business where the CEO can afford a home, can have 2 cars and kids through school, offering a financial service. And no one in the world would have thought that would be a viable business. So before you write off crypto or blockchain, understand that there's licenses now that makes them regulated activities if you comply with the licenses. And second, that it's a massive opportunity for fintech innovation. I always say this, every fintech innovation startup spends its first, let's say, 5 million rand in 6 months doing what? Building an account system, building pay in and pay out state systems, building redundancy, building an online statement view, building a KYC process to get their customer registered on the system, right? This technology gives you 99% of that straight out of the box. You don't have to build it. The very blockchain ledger gives you that infrastructure. And that allows you to go and build your innovation on top of that. So you spend the majority of your time, energy, effort on testing your key value proposition, not on building the infrastructure to play. And this is the disruption that I think people are missing. You can do fintech innovation in a regulated, licensed way now, using open technology to help solve customers' needs in completely new ways. And so South Africa is leading the market because we have such a deep fintech culture, and now we've got a license structure for this.
Exactly.
And this things married together, I think, just bodes for a tremendously exciting future in financial innovation in our country.
From what I'm understanding is that it's going to speed up the opportunity. It's going to put it into hyperdrive as soon as you kind of democratize the technology and actually get it to use to solve real world problems. Rene, before we go, I can't stop thinking about PayShop. I think it was about 10 months ago. You couldn't stop raving about PayShop. What happens to them in this environment before we close, or the PayShops of alike?
Well, I think PayShop still has an important role to play. It's just different rails, right? So, I mean, it's obviously also going to take some time before there's mass adoption of this. But it's in the PayShop example, it's just incredible to see how difficult it is to get mainstream adoption. Some of the geeks in the space get really excited. I mean, I had a plumber at my house the other day. I'm like, why don't they just PayShop? He's like, what on earth is that? I'm like, check out the money appears in your account immediately. So the guy's like, oh, it was an instant transfer. I'm like, it's not the same thing. But anyway, so I think it's still a very important technology in the interim. Will blockchain replace it completely? We'll see. But I think integration between the two would definitely be a very interesting thing down the line.
Exactly.
And that's really what the regulation opens the door for, is the fact that now we can have a bank that can, interact with, these technologies without having the fear of, their share price going to zero because of some scam or something of that sort.
I totally agree, Renu. I think that this is probably closer than you may think. The integration, and let me theorize for a second. If you were a financial market regulator and you thought that there was a risk in this new world, even though it's regulated, wouldn't PayShop be a really wonderful gateway where there's a minimum transaction payment and we're already managing these kind of risks? Wouldn't that be such a fantastic place to provide the primary integration between digital asset services and the existing payment system of today? I'll leave you with that thought and speculation. But I'm overall extremely positive about the future of fintech innovation in our country. And I think as consumers and as businesses, we're just going to benefit. And hopefully we can attract that global business to come and headquarter here in South Africa, where there is now regulatory certainty. And we mustn't forget that there's so much huge multinational companies that are looking for markets where there is regulatory certainty to do this development out of. And what better place than South Africa to do that? And 100% plug for Cape Town, which I think is the best city on the continent to do it for.
I love it. So I think the big takeaway is in a couple of weeks, we'll get 50 of these licenses approved and we can start seeing them actually announce it and start seeing what they've been working on in the background. So very exciting times. I'm looking forward to it. And I guess we'll have to have you back on to kind of, inform the people of what these innovations are. And yeah, so we can all dig in. The builders are getting itchy. So, Tobie, thank you very much for joining today. It's super insightful, and I think a lot to pay attention, a lot to consume, but it was awesome to find this out. So thank you for your time, nice and early in the morning.
Brilliant. Thanks so much, Bobby, for having me. And Renier, good to see you again. And best of luck for everything that you do. And just remember, just keep on building. Eh? Things are looking up.
No, that might become our new slogan, Renier.
Yeah, keep building.
Cool.
Like it, Tobie. Good to see you. Cheers.
Best, guys. Have a good day.